Oh my goodness, guys, what I'm going to share with you here today shocks me. It is scary to me. It is really scary to me. I'm going to share with you the top 20 stocks that are held out there by millennials, okay? People in their 20s and 30s out there. How do I know this? Well, there's an app called Robinhood. Through this app called Robinhood, you can buy and sell shares with paying no commission, okay? It's a pretty cool thing. In this app, they share their top 20 stocks that are most popularly held by people that trade through Robinhood, okay? Pretty cool stuff, right? Pretty cool stuff. But the stocks, like over half of them are absolutely trash, okay? These are horrible stocks to be invested in. It scares me that the millennial generation are invested in so many of these companies that I'm like, why? Number 7, wait till I go off on number 7. That one might be the scariest of all, guys. There's so many bad stocks in here. I'm just gonna share them with you guys and kind of share my opinion around this. By the way, are there some older people that also use an app called Robinhood? Probably, but by far and away, the majority of people that use Robinhood app are under the age of 35, okay? So I hope you guys enjoy this. By the way, if you have an opinion on any of these stocks mentioned here today, any of these 20 stocks, feel free to share. We're just gonna start at number 20. Let's get into this, guys. So coming in at number 20 is a company named Starbucks, okay? Starbucks. You know, I guess you'd call it a great American corporation. However, the issue is with Starbucks right now, they are going through some stuff, okay? They have, you know, comp store sales that are unbelievably weak. China was a strong growing market, and now all of a sudden it went from growing super strong to there's no growth in China, and it's like, what happened? And they blame it on some new app came out where there's like coffee delivery in China and whatnot, and it just took away their huge growth. Like comp store sales in China were amazing for Starbucks. Now they just went to nothing. North America super weak. So the company is just a company that's struggling right now. Their EPS, if they wasn't for them buying back a lot of shares, their EPS would actually be negative in a big way the last few quarters. You know, I guess I can give this one a blessing. Like, I'm certainly not a fan of Starbucks shares, but at least like this one's an okay stock compared to a lot of these stocks on the list, guys. Coming in at number 19 is a company named Square. This is one of the hottest stocks in the entire stock market for the past 2 to 3 years, okay? I still remember when Square, like this we're talking like 2 to 3 years ago, Square was like a $10 stock, and now it's like a $70 stock, okay? It's just been an unbelievable ride for Square stock. They're doing some great things in payment processing. You know, this one is highly valued company, okay? Highly valued company. They're gonna need to execute on some amazing growth for the next decade to justify this valuation on the company right now. It's a great growing company. I guess I can give this one a blessing, but certainly not my favorite in terms of valuation, all right? Let's get into number 18. It is a company named Disney. I will definitely give this one my blessing. Disney is a great corporation, okay? The amount of brands Disney owns. They're starting a streaming service in 2019. As long as that can be a decent success, that doesn't even have to be a smashing success. That can just be a decent success for the company. Like, this company is a great company. It's a growth company, a small growth company, but if they can get the streaming service out there done right, this could become a major growth company in the future. So great company. I can definitely bless this one. That's a good stock there. Micron, ticker symbol MU. Micron is a huge memory chip player. Super low forward PE. Is it scary that maybe DRAM pricing could fall in the future? Yes, that's definitely a scary thing out there. If you didn't already know, Micron's in a bit of a commodity related business, but there are really only 3 players in this space. Micron, company named SK Hynix, and also Samsung, okay? Those are the 3 main players in their markets that MU competes in. This company has a super low forward PE. We're talking like a 5, like a 4 or 5 forward PE. You know, it does worry me about, you know, maybe DRAM pricing could fall in a big way starting in 2019. That does worry me, but at the same time, it's such a low forward PE that, let's say, you know, MU's profits were cut in half. What's it put them at, a 9 or a 10 PE? That's not so high in the end. So I could give that one a blessing, okay? 16 is Alibaba, ticker symbol BABA. Great. This is my favorite play out of China, okay? I think this is a great company. You know, it's I would call it, I think they have bigger potential to grow that company over the long term than actually Amazon has, which is saying a lot because Amazon's just a monstrous corporation, right? I think BABA actually deserves a valuation similar to Amazon right now. It doesn't quite have it, and I think Alibaba actually has a chance to be a bigger corporation around the world than actually Amazon does. Bottom line is, I love this company. You know, I wouldn't mind owning. I'm surprised I don't own any shares of it. But if I was forced to buy a Chinese corporation, I would buy Alibaba without question, guys, without question. Coming in at number 15 is Amazon. Amazon, if you watched the video I posted last week, I believe Amazon stock and Netflix stock are overvalued, okay? With that being said, I can understand why people would own this company. They've won retail for the next 10 years in the United States of America, okay? That is a huge thing. When you win retail for the next 10 years, like who's going to touch them in retail in the next 10 years? In my opinion, no one. They've won that game, okay? Then they have Amazon Web Services, which is just growing into an absolute monstrous, huge other part of their company, okay? And that could be a huge profit engine for the company for years to come. I can understand why people own this. Do I believe the company is overvalued right now? Yes, I do. But at the same time, you know, this company is going to continue to grow for a long time in the future. So I can understand millennials owning this stock. It's a monstrous corporation. They're going to continue to grow for a long, long time in the future. And if you're looking at it from perspective of, is Amazon stock probably going to be higher 10 years from now than today? Probably, okay? Even though I feel it's overvalued here in the short term over the next few years, if you're looking at it from a 10-year perspective, if I had to place money one way or another, I would say Amazon will be valued higher 10 years from now than lower than 10 years from now, guys. So I can understand that one, all right? Let's get to number 14. Number 14 is a company I just bought shares in recently that, you know, if you watch that video, I don't plan to buy any more shares of that company, but I just hold them for the next 5 to 10 years. It's Tesla, okay? Once again, another company I can understand why millennials will want to own this stock, especially if you have a long-term perspective. A company trying to revolutionize the auto industry and revolutionize the energy industry. That's a huge, huge thing there. A risky company, though. It is definitely a risky company. They do have a lot of risk with that company, obviously. They're not making profits right now. They could get to a place where they're profitable very soon. But as of right now, this is a company that's taken massive, massive losses. So something to keep in mind there. But, you know, when you look at it from a long-term perspective, they got a great opportunity in front of them. Number 13, I can definitely give this one the blessing, okay? Nvidia Corporation. Nvidia Corporation, company that's been clicking on all cylinders for the last 5 years. Unbelievable growth engine. If you invested in this stock 5 years ago, you've made a lot of money. I think it's up somewhere around 1,600% in the past 5 years. Unbelievable growth beast. Should continue to be a growth beast long into the future. They're winning at so many different industries. Nvidia is a great company. I can't say anything bad about it. Coming in at number 12 is Bank of America, okay? Nothing bad I can say about this one either. You know, 12 through 20 aren't that bad. It's 11 through 2 that gets really bad for, you know, the millennial generation here. But Bank of America, nothing bad I can say about that. Giant bank, pretty much too big to fail. I mean, if something ever happened, the government would probably bail them out. Let's just be completely honest. Straight profit engine. I can't say anything bad about Bank of America at the end of the day. Now here's where things turn for the worse for the millennial generation. Stock number 11 is Snapchat, okay? The stock that is 11th most held position is Snapchat. Snapchat, in my opinion, you know, could it be a spec stock play? Yes. But at the same time, Snapchat, when I look at this stock, right, they screwed up. They had so many things going for them, okay? Then all this more competition came in with Instagram. Instagram copied, you know, Snapchat stories and whatnot. They copied a lot of Snapchat's features. And then Snapchat decided they're going to change everything up. They changed their layouts. And basically, it has been, you know, a big downfall for the company. And I think we'll continue to see that in the Snapchat's numbers over the coming quarters. The company that's losing massive amounts of money, and they're losing users. They're going to be losing users, okay? That's a really bad combination when you're losing money and, you know, you're going to have weakness in users. I've seen it on the platform. It's been like an exodus from that platform in the last 6 months. Are there still a lot of people that use Snapchat? Yes, but it's just not nearly what it was at one time, at least in North America, okay? So Snapchat, definitely, you know, the excitement is gone in that stock. Coming in at number 10 is Netflix. Netflix, company that it's dropped quite a bit since I put out that video a week or two ago about, you know, I thought it was overvalued. I still feel like the stock is overvalued right there. I mean, it's still at somewhere around $160, $170 billion valuation on this company. And, you know, are they probably going to win video streaming overall? Yes, I have a feeling they probably will win that, although they got massive amounts of competitors coming in over the coming years. I don't know if this company really deserves 160, 170. When I did that video, it was over $180 billion market cap, in my opinion, on where that company's at, how how little money that company makes for profits right now, the amount of money they're gonna have to pour into content just to kind of keep up with the Joneses, because they've got so many companies coming in this space. Apple, Facebook, Google, anybody across the board, Disney, obviously they still got the old competitors of Hulu, cables. There's so much, competition from so many different competitors with Netflix that personally, I don't think it's a good stock to hold. I think it's an overvalued company. And that's just kind of my feelings on Netflix stock overall. Number 9, Twitter. My goodness, guys, these stocks are pretty bad here. So Twitter stock, been a hot stock for the last year or so. Obviously, they're kind of benefiting from the fact that the President of the United States happens to use Twitter a lot. I think that's a big benefit to the company that, the guy that's causing so much controversy all the time, he sends out a tweet and everybody starts talking about, oh my gosh, did you see what Trump just tweeted? And everybody's got to go on there and check it. Did he really tweet that? And then they start commenting and liking it if they like it and agree with it and whatnot. That's given Twitter a huge boost. When you got the President of the United States tweeting all the time, that gives you a huge, huge boost, okay? They have that going for them right now, and that's a really good thing that's going for the company. But some of the trends that have been going on with Twitter for a long, long time, like the lack of user engagement and whatnot, a lot of that stuff is still going on, okay, guys? Twitter, it's just, I wouldn't invest in that company. I would not invest in that company. Number 8 is Facebook, which is a great company. I can't say anything bad about this one. Straight profit beast, an absolute profit beast Facebook is. They own obviously Facebook platform, they own Instagram platform, WhatsApp, they have Oculus. They're doing a lot of big things, and they have a lot more monetization of those platforms going over time in terms of the amount of ads on those platforms and in terms of what advertisers will be willing to pay for those ads in the future. That company should easily be $1 trillion market cap, probably within a year or two, honestly. I'd be surprised if they're not $1 trillion+ market cap within a year or two. If not, it's going to be probably within the next 5 years. They're such a phenomenal growth beast, and they're fairly valued. 22 forward P on that company. In my opinion, that's not valued too high. Only thing I see for weakness for Facebook is I think the monthly active users and daily active user numbers, I think those are going to be hard to impress, in my personal opinion, going forward, just because Instagram's kind of given it a boost for so long. I think as far as a percent going up, the numbers are starting to get so large, I think that's going to kind of weaken now, but profits are unbelievable. I can give that company a blessing. Number 7. Oh, here we go, guys. Number 7. GoPro. Are you kidding me? This is the 7th most held stock by millennials out there. Oh, where do I start with GoPro? Oh my gosh, guys. Why would anybody want to hold this stock? Other than maybe hoping that somebody buys them out for, let's say, $8 a share or $10 a share. Other than that hope, why would you own GoPro? Like, it makes no sense to own GoPro at this point in time. They got out of their drone business, which was their one business that could potentially grow in the future, and they just totally screwed that up from the beginning, okay? They totally screwed that business up from the beginning, okay? Camera sales are unbelievably weak for the company, okay? Unbelievably weak. It's hard to find somebody that wants to buy one of the new GoPros, okay? Unbelievably weak camera sales, which when you have really weak camera sales, guess what is also weak? Accessory sales, okay? It's a great thing when camera sales are strong because more people buy accessories that go on those GoPros, those $40 accessories that really cost a company like $5 or $10 to make. That's kind of a benefit and it can help the company out, okay? But when camera sales are really weak, you're not selling accessories. And now you're out of the drone business, and VR, from my understanding, is pretty much a flop at this point in time with GoPro. So what do you have with that company? And you've got a horrible management team that has totally mismanaged the company over the last 5 years. What do you have? Like why would you invest in, like, it literally makes no sense to me why anybody would look at that company and be like, that's a good investment. Their balance sheet's not even good anymore. Now they're just loaded up on debt. They don't make any money nowadays. Like in my opinion, there's no reason to be in that stock unless you're hoping that they get bought out and you get a premium for your shares. But I would just say in most cases, that's a bad situation, okay? That's bad if you're hoping that maybe you can get a buyout. Some companies kind of come and bail them out and you can sell your shares for higher. That's a hard thing, guys. Number 6, oh my gosh, it just continues on. Fitbit. Oh, guys, GoPro and Fitbit. Number 6 and number 7 most popular stocks held by people with Robinhood, which is the millennial generation. What are you guys doing? Holy smokes. Fitbit. Seriously, like Fitbit, really, like who's getting a Fitbit? Okay, most people now, if they want a wearable, they're getting an Apple Watch, okay, or they'll get some type of Samsung product. But wearables in general just have not taken off the way people thought they were going to be in terms of people actually continue to wear them throughout a day-to-day lifestyle basis. When I look around, when I go to a store, okay, when I go to an actual physical store, when I see friends and family, I don't see any wearables on them, including me. I could afford any wearable you could possibly imagine. I don't care about wearing an Apple Watch or anything. There's nothing out there that said, whoa, I gotta have this, okay? And I'm an Apple fanboy. I don't even own an Apple Watch, okay? I know people that own all types of wearables. Do they ever wear them? No. Whether we're talking Fitbits, whether we're talking Apple Watch, they wore them for like a month or two, and then they went back to wearing a watch or wearing nothing at the end of the day. It's just a sector that, got really exciting and people were really hyped about it, and it just has not transformed. And then Fitbit's been a lagger of the bunch. Why? Why do you want to be in GoPro? Why do you want to be in Fitbit? Unless you're hoping for a buyout, what do these companies have? All they do is lose money, and their balance sheets are getting worse. And their demand for their products is falling and falling. What is the reason to be in these type of stocks? Number 5 is AMD Corporation. So AMD, that company does have some growth, and the good thing about AMD is now they are starting to show that they can maybe be a profitable company, which is a big thing because that company hasn't been profitable in a long, long time. So if they can become a profitable company and they can compete decently with someone like an Nvidia, that's a big, big thing for the company, okay, and Intel and some of the other players. So AMD, would I own the stock personally? No, I wouldn't. But at the same time, could I say it's a bad stock to own? No, I can't say that. I can't say AMD is a bad stock to own. It's possible that it could be a very successful company, okay? So I won't speak bad about them. Mr. Softy, number 4, Microsoft. I gotta speak really highly of Microsoft. This is a company that was dead in the water for like 14 years, as in like 2000 through 2014. The Steve Ballmer era was very much a dead era for Microsoft, okay? They tried to compete against the iPhone and failed horribly with their Windows products and whatnot. But Microsoft has totally changed under Satya Nadella. That guy's done a phenomenal job. I can't say anything bad about him. The growth in that company has been absolutely amazing in pretty much every product category the company has. It's just a great stock. I mean, just a great company, great stock, very well run nowadays. It's turned into a growth beast. I can't say anything bad about that one, okay? Coming in at number 3 is a company named Ford Motor Corporation. Why? Why would you want to own Ford Motor Corp? Like, I understand it's a low PE. I understand that's attractive. A low PE in the company, that could be attractive, all right? But at the same time, when I kind of think out, this is how industries go nowadays, okay? There are basically 2 main players in every industry. That's the way, just like the companies work out now. So electric vehicles is here, it's got the here and the now and in the future, okay? EVs is the way to go. So with electric vehicles being the future, all right, they're gonna probably be 2 players, 2 main players, and then there might be a few smaller players in the game. The 2 main players, one's gonna be Tesla, they're gonna be number 1, and then who's gonna be number 2? If I had to put my money on a company to be number 2, I wouldn't put it on Ford at the end of the day. I would not put my money on Ford being the number 2 player in electric vehicles. I just don't see it. Is it possible? Yeah, and is a company on a very low PE right now? Yes, but in terms of, is that company forward thinking? I don't see it with that company at all. Do I see them being the number 2 player in electric vehicles? Absolutely not, guys. Absolutely not. So their business model is dying. Wall Street understands their business model is dying. That's why that stock trades at such a low PE. I think last time I checked, it was trading at like, I think a 6 PE or something like that. That's why it trades so low. Like, Wall Street understands that's a dying business. Like, it's a dying business that's going to start going down and down as electric vehicles get more and more popular. And then you just got to wait till Tesla actually, announces their truck someday, which, probably could be within a year or 2. They announce that, and then all of a sudden, what's going to happen with the Ford F-150 sales and whatnot after that, the 250, the 350? What is going to happen with those type of sales once there's a major electric competitor in the truck space? Like, I just don't see it, guys. I don't understand why millennials would want to own Ford. Number 2, another company I don't understand why they'd want to own is General Electric. What for? This company's a mess right now. The company's a mess. And let's say they make it through and it's good and whatnot. Is this really a growth monster company that's worth being in this type of company? Is it worth being in a company that's going through this type of mess? In my opinion, if you're in a company that's going through a lot of hardships, okay, and is going through a tough time, there better be a huge potential return out there, okay? There better be something that, wow, we can make double, triple, quadruple our money in this stock over the next, let's say, 5 years, as long as they turn the business around. Is there that type of potential in General Electric? I don't know. I don't really see it myself. Is this a stock that could be triple the value or quadruple the value in 5 years from now? I don't really see it. Maybe there's something I'm missing, but I'm like, why would you want to own a stock that's going through all this mumbo jumbo? I don't see the risk versus reward there. If you're taking a risk like that, there better be a huge return on the other side, man. And in General Electric's case, I'm like, really? I don't see the huge reward out there for the company. Let's just put it that way, guys. And the last one, I could definitely give this one the blessing. I'm happy this one's number one, and it's Apple. Millennials should absolutely, I mean, pretty much everybody out there, you know, it makes sense to own Apple stock when you look at how solid that business is, when you look at the way the services is growing, when you look at, you know, the way they're starting to diversify that model in the way that the company just generates cash, the talent around the management team there, you know, it's Apple at the end of the day. Like no one ever lost money investing in Apple for the last 20 years. As long as you invest it, you're up on your position in the last 20 years, guys. So those are my opinions about those 20 stocks, man. So many of them are just like, why were some of those like on the list? Like, I just don't see it. You got to always think like risk versus reward in investing. And so many people are in super risky companies that are either close to going bankrupt or may go bankrupt, or their business models are in total decline. And it's like, what is the reward with some of those stocks? Like Fitbit and GoPro, what's the reward? To maybe make 20% or 30% if the company somehow gets bought out? And what's the risk? Bankruptcy? Like why? Like a lot of those stocks, I'm like, why? But it is what it is, guys. Anyways, let me know what you think about those 20 stocks. I would love to hear from you guys, as always, in that comment section. Thank you for watching. Have a great day.